I guess why we do it is because those risks exist. I think everyone knows that. When you buy a scheme, you're not necessarily expecting it to be perfect. But the real kind of nuance, I think, is about being able to understand whether a scheme that someone is selling really matches the client's expectations of what they're buying. So, this might be something which is a portfolio with a couple of really star projects that are very well developed, almost construction ready, and there might be a long development tail of projects which perhaps, sort of 50% there, some might make it, some might not. You would place a much lower market value on those projects. And I think that the key thing is to understand, are you paying a premium for something which is being sold as a project which is perhaps construction ready? It might have a connection date in the next couple of years, in which case there is a huge amount to do to ensure that what you are being sold is achievable. Perhaps if you were buying a project which is much earlier in its development stage, then you're happy to accept quite a lot more of those risks. So I think it's all about whether you're matching the expectations ultimately with the price someone's paying for a project.
Hello and welcome to the Connectology podcast. Here, Roadnight Taylor's influential team of elite connection specialists and their expert guests help you to better understand distribution and transmission network connections and how to acquire them faster, for less cost and at lower risk. Welcome to this Connectology podcast. This episode is on due diligence, and I'm joined by two of the four Connectologists, Cleary and Pete Aston. And it's a topic about which I know next to nothing, so you're going to have to bear with me. You might not hear an awful lot from me, but I've got two questions to kick off, and you're going to have to choose between you who does which. One of them is very simple. What is due diligence? And then the second one is, why do we do it in the first place? And just a little bit of context, it's by far and away the fastest growing of the services that we deliver. I think that's relatively natural progression of the market because there are so many more projects that are getting through to sale. They've got planning, they've got grid, so you'd expect that. But I also think there are an awful lot of people who are out there selling projects and acquiring projects who are probably in relatively uncharted territory. So I think there's probably an awful lot that can be learned on the grid side. So with that little bit of context, what is it in the first place?
I'll take that then, Hugh. You've set it up quite well to start with. So it's all about the sort of acquisition of sites. So when developers are looking to buy projects, buy connections that other developers have already applied for offers for and got offers for. It's the process of that developer trying to understand the risks on the project in terms of the electrical connection. So it's working through the connection offer, everything that's happened since connection offer's been accepted, trying to understand the main risks associated with that connection, which we'll go through as we carry on through the podcast.
Cool. I guess why we do it is because those risks exist. I think everyone knows that. When you buy a scheme, you're not necessarily expecting it to be perfect. But the real kind of nuance, I think, is about being able to understand whether a scheme that someone is selling really matches the client's expectations of what they're buying. So, this might be something which is a portfolio with a couple of really star projects that are very well developed and almost construction ready, and there might be a long development tail of projects which perhaps sort of 50% there, some might make it, some might not. You would place a much lower market value on those projects. And I think that the key thing is to understand, are you paying a premium for something which is being sold as a project which is perhaps construction ready? It might have a connection date in the next couple of years, in which case there is a huge amount to do to ensure that what you are being sold is achievable. Perhaps if you were buying a project which is much earlier in its development stage, then you're happy to accept quite a lot more of those risks. So I think it's all about whether you're matching the expectations ultimately with the price someone's paying for a project.
So you're understanding the risks that you're going to be buying.
Exactly.
Cool. And what are you looking for when you are carrying out due diligence?
I think
have they done it right?
Yeah.
Yes. Every consultant's favourite activity, really, just marking someone else's homework.
And it's funny because it all starts with being given a whole load of information from the sellers. often we're acting on behalf of the buyers in the circumstance. And you get access to a data room or get a load of documentation sent through to you. So the first thing that you go through when you're looking at this is, have I got all the relevant documentation that I might need? Often it's sent through to you, isn't it, Catherine, in a dump of like hundreds of documents.
Yeah.
And then the challenge there is, which ones do we need to look at? Because you're not going to look at all the documents. So it's then trying to sift through and work out amongst that whole big collection of documents, which are the most key ones, critical ones to actually review.
And for that reason, due diligence is quite a responsive service by default. We have to work quite closely with clients because, as you say, if actually it turns out you hit a massive red flag early on, you've only spent a couple of hours sifting through the data room, you don't want to pay us to do a really detailed bit of due diligence. So we tend to break it down into kind of red flag due diligence, that initial sniff test. I think Hugh hates that word. And then kind of following up with, more detailed due diligence, as we get that more thorough documentation through. It's maybe worth saying, what Roadnight Taylor do obviously is grid connection due diligence. When people are buying really large scale projects, we're often working as a part of a much wider team, potentially looking at the legal risks and legal due diligence, commercial due diligence as well. There might be other technical specialists. I suppose at the distribution scale, Hugh, there's perhaps a kind of slightly smaller scale of projects where a lot of developers would do their own in-house due diligence on things like planning, and they're kind of pulling us in as grid specialists because they don't have that internal expertise.
Catherine, you've mentioned in the past that one of the things you're looking for is actually not so much inaccurate information, that the information that is missing that might be quite telling in itself.
Yeah, absolutely. So sometimes this is just a process which hasn't yet happened, and sometimes it is, perhaps the worst end of the spectrum, a seller trying to potentially obscure kind of quite detrimental information about the project. So the key thing there is not just being able to kind of read through the documents and thinking, does this sort of scan right? It's being able to say, we know because we have seen 100 49.9 megawatt 1 through 2 kV connection offers that you should have the following documentation. And actually, if you haven't been through that process, if you haven't got a formal variation letter as a result of going through the project progression process, the transmission impact assessment process, that is an immediate red flag. Just having an email from a DNO engineer saying, yeah, it was fine, we added you to an appendix G, not good enough. This is, so it's that extra level of due diligence, making sure that the documentation is there to support it. And that ultimately this is what's going to underpin a contractual arrangement. You are acquiring the site, and that those contracts are based on the documentation which has been shared. So it's really key that everything is documented and that you're getting someone to look at this who knows what should be there.
And just in terms of what should be there, it's sometimes about the hidden cost, that actually the documentation can't point you towards it, but there are hidden costs in there.
Yeah, we try and pull this out in general, actually, for all our customers, even when we're doing things like connection offer reviews for developers we work with very closely, making sure that customers really understand the full grid costs. So, quite often in sort of teaser documentation for a site that's being sold, you'll see a kind of pounds per kilowatt figure. That will often just reflect the connection offer costs. So the cost of the DNO or the transmission operator to connect the system. It would be very common for there to be additional costs in there, which, when I described what they were, things like the civil works for a 1 through 2 kV substation, anyone would say, well, that's a grid cost, but it won't be included in your grid offer because your DNO will have said this is a customer responsibility. So we call them customer works. And at distribution, that might be something like civil works or a substation enclosure. It might be a few $100,000, or it might be £1 million worth of works. At transmission, your customer works, which are not included in your grid offer, could be a 400 to 33 kV transformer, £50 million worth of works. So it is really important to be clear about what the entire grid costs are, and they are not just the things included in the connection offer.
Just a couple of things on that. First of all, do third-party works come into that?
In every offer you should get some sort of a statement on third-party works charges, especially for transmission schemes. And quite often it just says no third-party works are required. Who said no third-party works are required? Has the third party said no third-party works are required? Or is that just someone crossing their fingers and hoping for the best?
Or is it no third-party works have been identified at present?
Well, yeah. And so actually they haven't yet gone through that process of contacting the third party to try and work out whether there's significant costs to come through that channel. So that's often quite a really crucial one for us.
And just to explain,
raise.
so that third party, if you're looking at transmission offer, that third party would be the distribution network operator who's
Mostly.
impacted, or
Not always. So
Other customers as
other
well,
other
other
transmission
connected sites.
customers. So you might have, a big
right.
nuclear power station. They could be a third party if you were connecting into the network close to them. Offshore wind farms are third parties for quite a lot of connections in East Anglia.
So they're essentially like a consultee. Would that be right? That they would be approached by the transmission operator or the
Well,
ESO?
this is one of the problems with third-party works, is the process is really clunky. So the ESO, National Grid ESO, in the offer says you need to contact the third parties. And so then it's the responsibility of the developer, the customer, to go and contact those third parties in order to work out whether there's any third-party work. So the ESO sort of takes a step back and says, well, it's nothing to do with me. Apart from in some instances when they say, yeah, we'll get involved.
Because we've identified 4 third parties and they are affecting 20 offers. So they say, well, actually, it makes much more sense for us to do it. I think you're right. It is kind of consultees. It's a bit like you're building an extension out the back of your house and it's all the people who you have to go and say, does this block out your light?
Yeah. And obviously that third party works as a rabbit hole we could spend hours in. So the other question was actually, if you're looking at due diligence, is there much of a difference between distribution and transmission schemes?
I guess one of the key differences on the distribution side is that you have to have gone through the transmission assessment process. So a project progression or a modification application, something along those lines. So you can have got a really good offer from the DNO, but if you haven't gone through that transmission assessment process, you don't know what the full impact of timescales and costs is. So that is one crucial difference between distribution and transmission schemes. I think one of the other ones, as Catherine was saying a bit earlier, is just the differences in costs that you might experience on the sort of customer side of things, the balance of plant costs.
I suppose also, just perhaps like an observed difference recently, the majority of transmission schemes which are being transacted are probably at a relatively early stage. So what we have actually done due diligence on one much more advanced project with a much closer connection date, but perhaps things which are coming to the market now might be things with kind of 2028 connection dates. Actually, they might not have had very much design work done by the transmission operator. So you're doing more of a kind of bare bones skeletal kind of contractual review of all of that offer documentation and identifying what needs to happen over the next couple of years for that project to become real. Whereas at distribution, we probably see the whole kind of spectrum of sites, from the person who says, yeah, we can build this for April 2024. I mean, with a massive pinch of salt. I think I saw that this morning. But you can't build anything for April 2024 unless you've got a very, very friendly transformer manufacturer, I would say.
Cool, thanks. Good time to take a break? Great. If you're liking this podcast so far, you may want to pop over to the Connectology page on Roadnight Taylor's website and sign up to the Connectology newsletter for much more know-how, insight and thought leadership in electricity network connections. The link to this is in the description. Don't miss out on any of the articles, explainers, videos, webinars and podcasts that Roadnight Taylor's Connectologists share to give you an edge and help you overcome your grid frustrations. Welcome back. I hope you enjoyed your break. So a huge topic for me and a massive talking point here within Roadnight Taylor, and it should be a huge talking point within the industry, but it isn't yet, is outage risk. And there is definitely a growing realization that it's a growing issue, which is great, and more the merrier. And I'm assuming it's a big part of due diligence, right?
It is, because people perhaps think outage risk and due diligence, and the first thing they think of is, can I get an outage for my connection date to happen? So I'm buying a project and it's got a connection date of 2025. Is that EHV outage or transmission outage confirmed with the DNO? When we say outage risk, Hugh, what you mean actually is the ongoing risk over the next 25 years of this project. Actually, is it a bankable project, or is it a project which is going to be subject to so much potential constraint and outage as a result of network conditions that you're not going to get your money back? And I think it's that second element which people are aware of it. I think they kind of tend to have a slightly tunnel vision. Perhaps, they see things like A&M and think, oh, I need to think about curtailment, but we don't more broadly think about outage risk as a matter of course for kind of business as usual, non-firm connections on the networks.
And certainly outage risk has been a thing at distribution connections for a long time. We have done a podcast and webinar on this anyway. But with growing numbers of 132 kV connections at distribution, outage risk starts to become more of a broad issue. And then at transmission, a lot of the connections that are in the pipeline now are just single circuit connections, some of them with very interesting connection solutions, which are definitely non-firm and are at risk of being switched off for outages. At transmission as well, that we're seeing quite big risks in terms of outages that perhaps haven't been seen before at transmission.
And I guess one good thing is that tends to be quite formally signposted at transmission. So restrictions on availability are something which are documented very clearly in a connection offer. There is a red flag there saying there are some restrictions that apply to this connection. Getting from that knowledge to know that this might be an issue to a more quantitative understanding of what that means for the returns on the project, the actual generating sort of capability of the scheme over the year, that's quite a lot harder potentially at transmission, I think, Pete.
Yeah, it's certainly the availability of information isn't always there to actually work out what that means.
Even historically, let alone going forwards into the future. And I think that's something, that you can't really stress enough how much is going to happen going forwards over the next 10 years. We have one of the most ambitious transmission reinforcement plans ever, and it's going to lead to a lot of outages.
Yeah, but not only that, we've got a lot of connections that are going to be schemes that are going to be offered non-firm connections, specifically so that they can connect ahead of all these outages that are going to happen to reinforce the network. But those connections are then at risk of being switched off because there's going to be so many outages happening. So it's going to be a really interesting scenario to see what that looks like. And I don't even know if the transmission companies are in a position to even give any realistic indication as to what the impact is going to be over the next 10 years.
So when you're carrying out due diligence, what are you looking for then in order to kind of get a bead on that level of risk?
I guess the absolute gold standard, which we have had recently on one project, was a transmission operator able to say, here's your list of restrictions, here's the historic data to show how those circuits have behaved in the past, and here is our 10-year plan to show what we are planning to do to those circuits between now and 2032. This was, a developer who'd done quite a lot of work. They knew this was an issue, and we'd sort of identified that they needed some of this data, and they were then able to provide that as a kind of supplementary request. So due diligence, it's a bit of a conversation back and forth to say, here are these risks. We want to know a bit more about these following subject areas.
Back and forth with the vendor or back and forth with the network operator?
Back and forth with the vendor. So bear in mind for due diligence, it's quite key to understand the commercial relationship. At the point you are doing due diligence, hopefully you haven't bought the thing. So it's still theirs to solve the problems. So this is, effectively the kind of the client or the potential acquirer of the project, using us as a consultant to raise those questions back to the vendor. The vendor then kind of doing their own homework to sort of produce the most robust set of documents they can to justify the value of the project.
Okay, so that's the gold standard. And that gold standard was after being able to ask the right questions to request the right data and having a transmission operator who is able to provide it. So what's the difference between the gold standard and...
What you normally get is, as a minimum, you should get told what outages you're going to be switched off for. So that you'd certainly get that in transmission offers and in most distribution offers. It might be in the small print somewhere in a distribution offer, stuck in page 20 or something. And by the way, you're going to be switched off for these list of outages that you hadn't really twigged. So that should be the minimum that you get. The next stage would be some historic information, but often you have to ask for it or chase it, and it's not always that readily available, even though it says in the offer, if we're going to give you some constraints, we'll give you a list of historic outages, and you go, well, I don't have that. So you chase for it, and then they go, oh, we can't really get that. And
Yeah, or we can only get maybe 5 years.
Yeah.
And it often needs quite a lot of interpretation when it arrives, doesn't it? Being
Well,
able to say, well, was
yeah.
this a reasonable 5 years, or was it really good because in the 6 years before this, you'd taken the entire line out for 180 days?
Yeah. And, we're working with the scheme that's already connected, who's experiencing huge amounts of constraints because they potentially didn't dig into this enough in the first place to understand what the potential risks could be
Yeah.
with these sorts of things. So outage risks are up there as one of the probably key issues.
I did have the pleasure of actually listening to you, Catherine, on a call, having carried out some due diligence on a Scottish transmission connected project with significant intertrip risk. And it was absolutely fascinating. Two really skilled, experienced investment directors, and the kind of the grilling, the detail that they needed to go into in order for them to assess the project. That was quite an eye-opener. I thought, wow, this due diligence looks like quite fun. I mean, not for me clearly, but it was very cool. So that's outage risk. What are the other risks that you're looking for?
Well, I guess one of the next ones is curtailment from flexible connections. So that'd be like active network management, trying to understand, on this sort of automatically ramped up and down connection that you've got, how much curtailment are you likely to have? So some DNOs will provide a curtailment report with some sort of predicted level of curtailment. Some DNOs provide some data, some DNOs provide nothing. And you've got to then try and work out what that means. But it's then trying to work out, well, is that a reasonable level of curtailment? And then trying to help clients understand the processes they can go through to try and dig into that curtailment. Potentially look at scenarios around it to try and understand what could happen, the what ifs, if all the other customers ahead of them pulled out, how much better does it get? What about if demand on the network reduces? It could get worse. So it's to trying to help them understand what if scenarios.
Just looking at curtailment, where does due diligence stop? Because I mean, I take it you're not just setting sail and carrying out curtailment modelling. What would you be expected to do as a kind of like a default minimum?
You might ask for their curtailment modelling. So often, the kind of initial red flag due diligence is really about pushing a vendor to say, how well have you de-risked this project? And sometimes actually a seller might be forced to sort of say, you know what, we're going to go away and do some more work and come back to the market with this project and in such a way where we're able to de-risk this. Obviously, you've got to remember, especially if a site isn't in exclusivity, so you might have multiple parties looking at this. It's obviously not very efficient for them to all go away and do their own homework, and they might not be given enough information by the vendor to do that. So often it's kind of posing the questions back, identifying the risks, posing the questions back. Then once you do get to a position where actually perhaps you are the exclusive purchaser, you are now in a position where you might undertake your own kind of due diligence curtailment risk assessment. You might review someone else's curtailment assessment in quite a lot of detail.
Somebody else's homework. That must be. I did watch Philip doing that. I think it was just yesterday actually, and that was quite fun.
On an early stage project, I think, say something which was being sold at a lower value, and the developer was open about the fact they hadn't progressed it that far, then actually a follow-up to due diligence, so perhaps more detailed due diligence, might well be us undertaking, a kind of an initial curtailment estimate. I think one of the other things, Hugh, we haven't really touched on it here, but there's one other thing which I think we look at due diligence more than we do when we say do a connection offer review, because these projects are a bit further down the line, especially for the schemes which are being sold as perhaps construction ready, is look a lot more at the actual electrical engineering design of the scheme. And this is quite interesting from a geeky perspective for Pete and I, but really what we're looking at is, okay, so someone's got a 50 megawatt connection on paper and as an offer from the DNO, but is what they're planning to build actually able to deliver a compliant 50 megawatt scheme? And you would be amazed how often the answer is no. So the really common one is reactive power capability. So you have a requirement in your offer to be able to operate a range of power factors at your connection point. And that means you have to build enough capability somehow to produce that reactive power as well as your active power, so as well as your megawatts. And this is it's something which perhaps isn't very well understood, more widely beyond the engineers. I'm looking at Hugh's face, and he's going, "Oh yes,
I don't know what you're
completely
talking
Greek
about.
to
Anyway,
me."
keep going.
But the reason for highlighting it at this stage is that if you get that wrong, if you don't do that piece of design, or you sort of underestimate what you need to actually install in terms of your inverters, it has a really important impact, which is that when you come to do your compliance studies, so someone says you can't comply as a 49.9 megawatt scheme, you're not able to meet that power factor range. So we're going to derate your project, and you might become a 45 megawatt scheme overnight through really the fault of just not doing some fairly basic kind of concept design engineering, losing 10% of the value of your project. And that happens again and again on projects, especially at distribution level.
I think Philip had one the other day where the issue was around fault level, and that the data in the application, and nobody had picked up on it all the way through to getting close to energization, and the data was wrong, and therefore they were going to be severely limited. And I think that was even more than 10%. So that's a common thing, is it?
It is a surprisingly common thing. I think we've had stricter limits applied, so this has got this job of complying. Your compliance when you energize has got slightly harder since G99 came in about 5 years ago, and people are still learning that lesson. It's harder for a 1 through 2 kV connected scheme. So that is like an important thing. If that was the one thing you took away from the reactive power geek chat, it is that if you have a 1 through 2 kV scheme rather than a 33 kV scheme, it's something you need to think about much earlier.
And when you say much earlier, because that's much earlier than due diligence, or is it?
It's much earlier than placing a balance of plant order. So you want to be making sure that when you're ordering your inverters, you have thought about this. You've thought about what installed capacity do you need to comply. Ideally, you're doing it right at the point when you submit your grid application. That's what we do, right? That's value that we add, making sure that someone from day one is designing a scheme which can comply. But the point of no return really is once you've ordered your inverters, you've got planning permission for a limited number of containers on site. If it's batteries, something like that. At that point, you're a bit stuffed.
So somebody's acquiring a project, and it's fine if they know about this issue, and as soon as the deal's gone through, they can actually get motoring on these known risks. So what else are the big bear traps that
I think one of the other bear traps is just the deliverability of the project on the DNO side or the transmission side. Is what physical works have they got to do to actually make this connection happen? So that could be in actually just connecting to your point of connection. If there's a cable route involved, have all the easements been obtained on the cable route? If you're that far down the project, or have you got a reasonable chance of getting easements on that, or are you going in the road? What infrastructure crossings have you got to try and overcome? So there's a lot to work through on that. And then is there any reinforcement that's happening up on the network? If there is, what progress has the DNO made on this reinforcement scheme? So if they said it's going to be finished in 2024, are they working on it at the moment? Are they delayed by 2 years? And so therefore, are you going to be delayed by 2 years? So I think it's really important to get into that construction side of it from the network operator point of view, to understand what their program is. In an offer, you'll get a predicted timescale for connection, and it might say 3 years from when you accept the offer. So someone can take that and go, well, I can be connected within 3 years. But what they really mean is 3 years from where I get paid to start doing the detailed design work and start the scheme. So they might not have ever been given that instruction. So if they haven't, they're still going to be 3 years away from being able to deliver the scheme. So it's really trying to understand, and getting the client you're working for to understand the risks of, well, what's the vendor done? Have they done any of this due diligence work themselves? Have they pushed the DNOs? Have they got any indication on timescales? Has there been any plant ordered from the DNO side? That can catch people out.
I think one final bear trap for me, which is probably quite sort of topical, is inflation. So it is absolutely worth understanding that when we have grid offers, both at transmission and distribution, they are in the pricing of the day, and that might even actually be, a grid offer you got in 2020 might really have been prepared using a DNO's 2019 cost base. And there is no requirement whatsoever for them to hold themselves to that cost. It's all just an estimate. So, we have seen significant cost increases in kind of main electrical plant. And that seems to be set to continue. So it is a really important step actually for any kind of investment director to be looking critically at the costs, especially associated with old offers, and saying, what is this actually going to cost me in today's 2023 pricing?
And that's part of DD, right?
Yeah.
Cool. Just occasionally, probably far too often in reality, clients would have bought projects and then brought them to us when issues haven't been picked up at due diligence. And any of those that kind of spring to mind that you think, if only we'd been shown this project earlier.
I think that's probably a general true statement for quite a few early transmission acquisitions, where probably any parties that did do due diligence didn't really have the understanding or expertise to see how transmission connections specifically were delivered, and perhaps delivered differently. So things like tertiary winding connections, which looked like a 50 megawatt connection, but actually, potentially have quite a lot of hidden costs because of things like grid code requirements, national grids, sort of comms requirements, and so on. So we have seen that on a couple of schemes, where actually there was some due diligence done, but probably not with the right focus.
Okay, cool. And the whole grid code requirements, which as you know, is all Greek to me, but is definitely.
I was about to say another podcast, right?
Yeah, well, I think it's another podcast, but maybe one I'll sit out of. Thanks. Anything, Pete, from you?
Well, just a sort of issue I raised earlier around outage risks that we have worked with a few clients on schemes that are connected and have got real outage problems that could have been addressed at earlier stages. So that just goes to show to me that due diligence is really important. Get it right in the first place in your applications and initial connection offer reviews, but definitely get it right if you're looking to buy projects.
And I guess it could have been addressed, but could have been identified. And that's I guess the thing about knowing the risk that you're acquiring, because that particular project I know was millions in lost revenue per year and sort of peaking at something like 7 million. And that's the kind of thing that you really do want to weed out at due diligence. Great, thank you both. I now know at least something about due diligence. It's been fascinating, and I look forward to catching up with you on the next podcast. Thank you.
Thanks, Hugh.
Thanks, Hugh.
Thanks everybody for listening and taking your time, and I hope this has been worthwhile. Bye. Thank you for listening to this episode of the Connectology podcast. If you found it helpful, please share it with any of your colleagues or connections you think may be interested. And please do subscribe at Apple Podcasts, Google Podcasts, Spotify, or wherever you get your content. You can find out more about our services at roadnighttaylor.co.uk, link in the description, where you can also sign up to our free Connectology newsletter for more news and thought leadership in network connections. If, during this podcast, you found yourself wondering what it would be like to have a Roadnight Taylor connectologist in your life, please do email laura@roadnighttaylor.co.uk to find out how their game-changing skills and insight can change the game for you too.